Hello, everyone, and welcome to Inside Industrial, Commercial Property Executives podcast covering the forces shaping logistics and industrial real estate. Join me and industry experts as we examine demand drivers, supply chain dynamics, leasing, development, and capital across assets from last mile to cold storage. Automation, power availability, and changing supply chain strategies are redefining what modern industrial facilities need to deliver. I'm Diana, Associate Editor. Today I'm joined by John Morris, President of America's Industrial and Logistics at CBRE. We discuss how proximity is reshaping distribution networks, how automation is influencing building requirements, the growing importance of power and labor in location decisions, and how these shifts are impacting development and investment across the U.S. industrial market.
Hi, John. I just want to say thank you for being here for the second episode of Inside Industrial.
Thanks, Diana. Thanks for having me.
All right, let's jump right in. I want to start by asking, CBRE advises many of the country's largest industrial users on supply chain strategy and labor planning. What recent operational shifts inside these networks are prompting companies to rethink what they need from their facilities today?
Yeah, I think a few bigger things, Diana. Some of these not new trends, but trends that have accelerated more recently. And in the supply chain and delivery space, it's about proximity. It's about proximity to end user in really every regard. Some of that we'll think of together as nearshoring or manufacturing more proximal to end user. Nearshoring, right-shoring, Mexico instead of China, things like that have been happening. But proximity is also important with delivery, where you and I and our colleagues may order things that we normally would have been okay getting in 3 to 5 days. Now it's today or tomorrow. And the proximity of inventory to be available to service those needs has been a gradual trend, but I see here recently significant big box investments. And when I say big box, I clearly mean bigger warehouses. Big box investments with what I might characterize as depot inventory or inventory down the street for things that are purchased most frequently. And that proximity of inventory requires a whole new series of buildings, on average smaller than we're used to, closer to population. So that supply chain paradigm is obviously significantly different than 20 years ago, but even now different in terms of the expectations of those of us that buy online or even that want to be able to go down the street and buy something immediately, even different than these were a year into the pandemic. So on the supply chain side, big changes. And then on the labor side, I'm going to generalize and say that warehousing center job is less sought after in a knowledge economy. Sounds basic, right? That's common sense, Diana. But I think what we've seen since many folks left that space during COVID, left those jobs for many reasons, there hasn't been the return back to that business like that business has needed based on how it's used labor, leveraged labor in the past. And so the replacement for people is capital, and the marginal productivity of capital with new kinds of automation has been driving significant investments in automation within buildings and the reliability of multi-level automated storage and retrieval. Many of them we can call robots, and Amazon tasked having 1 million robots a couple of years back. So robotics and automation is the other significant trend, and how that even connects further to commercial property is that it's harder to automate. It's harder to rationalize capital investment in an older building. So right now, the vacancy rate in buildings pre-2020 is larger than the overall vacancy rate, and then buildings older than 2000, the vacancy rate is significantly differential than newer buildings. So we have a little bit of an obsolescence problem on our hands in industrial, but I think that's related to the two factors we just discussed, which is new buildings closer to people and buildings that can handle automation.
Now that you did mention automation, it is a factor that became more and more embedded in warehouse processes. What functional requirements are emerging as critical differentiators for occupiers evaluating the U.S. industrial space?
Yeah, in terms of automation, a couple things are basic. One is clear height. And for many of the automation modules built today that many retailers and wholesalers are preferring, those are themselves, the automation module itself is 31 feet high. And so to be safely clear above that, it really means that for almost any new building going to be automated by a retailer, wholesaler, et cetera, it has to be 36 clear. Now, older automation might do well in 32. Some companies might elevate parts of the building and have more of it be 30 clear. But generally speaking, for the up and coming types of automation, 36 clear is the bare minimum. And some modules can go higher than that. So that's obvious and evident. Floor thickness is a hard to define variable, but for many of these heavier automation modules, thickness, floor thickness, and being completely flat is critical. And then many will think about column spacing as being critical, but there are some workarounds in column spacing that make that less critical of a variable than the other two. And something I don't know enough about, but something everyone talks about now is power. These modules use more power, although nothing like the data center kind of things we're all talking about today.
Thank you. Power availability has become a gating issue in some markets, while labor access remains foundational. How are you seeing occupiers balance these two factors when comparing locations?
So one of the dynamics in industrial commercial property right now is the value of powered land. And that had always been a preferred position around the value of property, but now with the requirements of data center and hyperscalers, we find industrial competing for land sites with data centers. That's a completely new paradigm in the space. So land scarcity for powered land, now a significant issue, driving up the value of land and therefore driving up the cost of construction and ownership. So powered land for particular projects, yes, important, but maybe even more important is the fact that industrial now has to compete for powered land with the user it didn't used to even think about. So that's key. And then competing for labor, as we look at more automation in buildings, Diana, competing for labor is not just about the traditional flatbed picker packer packaging job. It's now more about those that can manage the automation, technicians that can work on, install, repair the automation, and those that can do the regular servicing on the automation. That's a job that didn't used to be as critical for warehousing. And that's a job that you would consider fairly scarce at this point. So that's another new paradigm in the space, is the need for technically skilled labor.
Very interesting. John, many corporations are refining their sustainability commitments. Which aspects are most influencing decisions about modernizing existing assets versus pursuing new development?
Yeah, in general, Diana, no surprise here that the sustainability conversation has become a lot quieter here in the last year and a half. It was a topic about which every occupier client that the company works with wanted to talk about, would like to know about. In the CRE space, a lot of us and our competitive set had invested in people and platforms to be prepared for those solutioning opportunities. And it just doesn't have the same level of emphasis in conversations that it did. I think we all believe in some value in sustainability for sure, and we all believe the topic returns or becomes more interesting again later at some point, right? It just makes sense. But I do believe that if I go back to 2022, we were even beginning to see buildings that were older or perhaps had some construction flaws regarding sustainability. Even concrete can be unsustainable at some point. The values of those assets were being impaired by the idea that 10 years from now they'd be unsustainable and less value. So that impact, that impute on valuation of buildings has stopped for now. I don't think anyone valuing these bulk distribution assets has nearly as much concern about sustainability impact on value of the building. But I know it's still the case in Europe. So it is, that is a market where the forward look remains. But it's really a hot topic right now, and not in the same sense that it was before, but in everyone trying to understand where does that paradigm land and when.
Indeed. Investors are increasingly assessing buildings through an operational lens. How is it affecting how CBRE's clients underwrite functionality, long-term viability, and potential modernization needs?
So Diana, that's a really, glad you asked this. This is such a pressing topic. I think that in general, the CRE and investor community hasn't taken a critical enough lens regarding the functionality of a building beyond the basics, I'll call them, around truck ports and dock doors and et cetera. Those are critical. But I mentioned column spacing. I talked clear height. What about floor thickness and functionality? And we actually, our team at CB has a new engineering partnership with a company called Firtea, a material handling services company, in my mind the best out there, where we're trying to work more with them to understand at a next level of detail the functional value of building, so that we understand better how to position that opportunity with investors, and whether or not key aspects of the current asset are maybe functional flaws, are maybe functional benefits. Because again, I think in our space, and it's been an acceptable science that we talk about the 80-20 things that really determine functionality. But given that you and I just talked about increasing focus on automation, other functional aspects of the building, I believe, need to be more well understood. And that's what our team at CBRE is really focused on right now.
Amazing. Congratulations on the new partnership.
Yeah, thank you.
So in today's development environment, are you seeing clear alignment between the type of product that occupiers say they need and what capital is currently willing to deliver? Or are there some structural gaps that still need to be bridged?
Another great question. I think if there had been a gap in the past regarding what a traditional spec might have been and what the average big box occupier needed, that gap has clearly been closing over the last 5 years. Capital more well informed, more liquid, capital really intensely focused on working with us and others on understanding what occupiers need. That conversation where capital and brokerage and occupiers are in the same room talking about what the business requires is so much richer and different than it was even 5 or 6 years ago, Diana. So that definitely is a level of intensity from capital that I think has been on the rise. And so many of the bigger, larger owners that we work with every day have programs dedicated to understanding that even better. We are bringing 20 or so occupiers to our big industrial conference that CB's having in Austin, Texas in April. And we haven't done that before, but we know that we and they and the 400 owners of buildings in the room will want to hear what these occupiers have to say. And so that's a special module within our conference this year as an example of our understanding of that importance. And then the other thing I'll say is that with the greater interest that owners have had in owning the asset, but these big companies don't do that every day. So for some of them, it's not a core skill, but they're leaning into capital and developers, and the level of build to suit has been spiking in the last 3 straight quarters. So build to suit, maybe to own, build to suit to lease, build to suit. Again, that's also tied well to capital wanting to know what occupiers want. The build to suit percent of construction projects right now, I can't remember the exact percent, Diana. It's like 37%. It's at a cycle peak because for many of these large shippers owners, they've decided that their special requirements, their level of automation, they want to own the asset themselves. And so they're leaning into capital and leaning into development expertise to help them create that opportunity where the building itself is exactly what the owner needs, and they're expecting to be in it for 10 or more years.
Mm-hmm. Thank you. The conference sounds exciting. I'm sure there will be a lot of interesting topics and details.
You should see if Shannon can get you a ticket.
Yeah, Shannon, please. So CBRE's integrated approach brings together incentives, labor analytics, and real estate strategy. Does this combination shape the outcome of companies restructuring or expanding their U.S. logistic network?
If we go back again, maybe pre-COVID, there was more of a disconnect in my mind between the real estate professionals in a specific tenant occupier company and the other parts of the business related to labor, maybe material handling, incentives, tax, conditions, environmental. And I do see many more of those larger clients approaching those challenges in an integrated fashion, where the real estate team is now much more aligned with the supply chain team, the people HR team, the distribution automations team, the engineering team. So just like we have approached that, to your point, as a more integrated partner, I think that our real estate clients are doing that as well.
Thank you. So from all we know, from what we've discussed here today, we can tell that lots of factors and trends have been affecting and changing what's happening in the industrial market recently. But looking ahead over to the next few years, which operational or technology-driven shifts do you believe there will be most influential in the industrial market?
Looking at it a little further, Diana, I think build to suit to own and that's maybe, that's an occupancy trend for sure. I think these sophisticated, needing 40 clear ASRS modules will become more the standard and expectation for large retailers than maybe they are now, where I think some shippers have 2 or 3 of these. I think for the biggest Fortune 1000, it will be having several of those and having those replenish inventory that we talked about needing to be serviceable immediately. I also think that the power competition will be driving some supply chain networks to be distributed in a non-optimal fashion. And if optimal's always meant fewest miles and lowest transportation costs, I think power, availability, and cost becomes part of that equation. And if you looked at how supply chain professionals have thought about optimizing a logistics network, it's always been transportation first, 2/3 of cost, people next, 20 to 25% of cost, inventory and inventory carrying costs another 10 to 12, and then rent and other 5 or 6%. Those would be the variables around which you'd optimize. I think power, availability, and cost becomes, over the next 5 years, another significant variable in how we optimize logistics.
Yes, a lot of variables. Thank you.
Yeah.
We'll sort of be really interested and curious about what's going to happen next. Thank you, John. I just want to say this was a great conversation. Thank you for all the insights and the great details.
Diana, thank you.
Stay tuned for the next episode and feel free to rate this one if you've enjoyed it. For more commercial news, trend stories, and podcast episodes, visit cpexecutive.com. Moreover, don't hesitate to join CPE Executive Council. Every month, we discuss the latest trends and topics with leading experts in the field, and your input could be extremely helpful. To join, please send an email to jessica.fiur@cpe-mhn.com. Have a great day.